Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, today we're going to talk about the potential upcoming recession
Yes.
and what could happen to the real estate market. It's everything that we're going to talk about is based on an article. This was it was in Forbes or Bloomberg.
Yeah.
The housing market amid recession fears. Should you buy now or wait? Before we go to the first quote of the article, let's talk about timing the real estate market.
Okay.
This is a sort of a hot thing of mine. If you're sitting on cash, like what are some risks of, waiting to buy?
Let's see. You don't get the house you want because that floor plan doesn't come up that often. That lot is never going to come up again. You're going to maybe pay more in the future. You are missing out on living in the house of your dreams. Interest rates might go not your way. What else?
Those are good. Now let's do some on the other side.
Okay.
What are some benefits for waiting?
Ooh, benefits. Well, let's see. The Crash Bros were right, and you're going to buy it for pennies on the dollar.
Possibly. Well, I wouldn't say pennies on the dollar. 98 cents is pennies on the dollar. It's 98 cents on the dollar.
I know that. That's why I chose those words.
Okay.
Because I'm talking about the Crash Bros. Focus.
Right.
Okay. Okay. What else? So there could be some weather event, and the roof blows off the house, but you don't own it, so you don't have to worry about it.
Sure.
Let's see, what else?
You have more time to save for down payment.
Well, you have more time to save it for down payment.
Interest rates historically drop during
exactly
a what?
Interest rates historically drop during a recession.
Okay.
It gives time for the neighbor that you don't like next door to move.
So maybe you don't need to sell and will go away. Right? Here's another benefit. If more houses come on the market, because this is all now, we were sitting here last year with we're going to have a recession in the fall. It never happened. And then it was, okay, no, we were off by a couple months. It's going to be in the spring. And now it's going to be next fall because it just keeps getting pushed off. I don't know whoever's scheduling this. I don't know if Jerome Powell schedules it, Biden's supposed to schedule it, or this was just like they just keep sliding it. But eventually they need to just either do the recession or not do the recession. Okay,
so I'm the one scheduling it because this is about my time frame as far as me being on time.
Okay, so we're going to go through the article, read some of the things, and talk about them. Some of the stuff in here is interesting. Some of it's absolutely, completely false. Today's high inflation has triggered aggressive moves from the Federal Reserve, which is many economists worry that we're headed toward a recession, which is true. That is the whole point of when you try to kill off inflation, you potentially cause a recession. It happened a bunch of times in the late 70s. These concerns also come at a time when home prices are steep and mortgage rates are rising, causing home shoppers to weigh whether they should buy now or wait to see if home prices drop from a potential recession. Let's talk about that. Home prices dropping during a recession. That's the convention. The conventional wisdom is people lose jobs. There's less people that can afford to buy. So prices have to fall.
So number one, that's false. So I'm just going to put that out there. We've done videos on this. We've got charts. That's false. The thing that kind of bothers me is that everybody's kind of jonesing for this recession to happen. And the bottom line is we had a recession by definition last spring. And
we had one 2020.
Yeah,
home prices went up.
Right.
We have a chart. We're going to show you a chart.
Right, but we had a recession by definition last spring, which is two consecutive quarters of negative growth. So we had that.
It was 0.1%, 0.1% negative. So everyone went, well, we're not going to count that one.
Right. So, this thing where you get to pick and choose what is a recession, I'm not too fond of that. It is or it isn't. And then when we when we will have the next recession, because recessions come, look, they're cyclical. They will happen. It's not a matter of if, it's a matter of when. So when we have the next recession, it depends on what is politically palatable. Is it more palatable to say, that's not really a recession? Or is it more palatable to say, the sky is falling, it's a recession going into a depression, go ahead and run for your lives. So, I'm a little tired of people redefining things to suit their purposes.
Okay.
But going back to what you said, during a recession, home prices, we had this chart up. It said that in 6 out of the last 8 recessions or something like that, home prices actually went up, not down. One of them, they only went down like a very minor amount. But the point is that a recession does not equal home prices going down the same way that a rise in interest rates does not equal home prices going down. This is a very complicated system. It's not that simple. You guys are more intelligent than that to understand that this is not a green light, red light, okay? There's a whole lot in between, and you're much more sophisticated than to buy off on that.
Okay, so I'm going to put the chart up. This chart the information comes from CoreLogic. You can just go Google this information. Mm-hmm. This is the last 6 recessions in the U.S. This is the 81, the 81 okay. one. Now, there was high inflation. So those price increases you're seeing are inflationary. Mm-hmm. We have inflation now. With the 91 one, which was probably the worst economy we've had in a long time. It was the post-war, a ton of spending, and things were pretty bad. And then the 2001 one was the 9/11 recession. Mm-hmm. And then 2008 was a great financial crisis, which was caused, now remember, a recession didn't do anything to the housing market. Actually, the economy was doing really good. We didn't actually, remember, home prices started actually dropping at the end of 06. Mm-hmm. 06 they fell, 07 they fell, 08 they were already falling. This is when all the banks were outed as carrying all this AAA paper with credit default swaps attached and all this lending and everything based on that wasn't true. Default, they would basically everyone was lending based on it was super low risk, it was super high risk, and that none of the portfolios weren't worth what they were worth, right? And then 2020, they went up 6%. All of these were during recession. So let's talk about how a recession happens, because we've lived through a couple of them. The economy starts to not do very well. You can see that there's, companies are having a problem, spending's down, the numbers are down. It takes 6 full months for them to actually, they can say they think we're in a recession, but they don't know till they measure GDP at the end of each quarter, right?
Right.
Okay, so usually by the time it's that bad, before we actually see the Fed starts dropping rates, mm-hmm. although that's only for short-term rates, that indirectly affects the 10-year Treasury, which is what mortgage rates are based on. Mm-hmm. And actually, the reason why the home prices go up during a recession is because mortgage rates start falling, and remember, they're trying to get the economy going again. Mm-hmm. So it sucks more people into housing.
Right. And housing is a huge driver in the economy. Not only is it a huge purchase, but then everything ancillary that comes with a house. Of course, you're getting new appliances, you get new furniture, all kinds of new things, and all of that is what gets the economy going. So that's an important thing to understand, that the Fed understands that housing drives the economy. Now, what bothers me is that it just seems to me like the Fed is still working with an abacus, because we are in 2023, people. News travels around the world at the speed of Twitter. Everything is computerized. Everything, all the data is readily available all the time. So the idea that the Fed, just wakes up after 6 months and goes, oh, gee, we're in we've had 2 negative growth quarters. I didn't know that. It's like, how does that even happen in this day and age? I mean, I'm sorry to be so outraged, but I am. It just seems like this data is readily available in real time, and the Fed has made no effort to catch up with the rest of the world, and they're still working off an abacus.
Okay. I'm going to read this quote. We're going to talk about it, and then we're going to point out some obvious things, because this is just, I think, completely false information. Okay. It says, first of all, home prices generally fall during recessions, with home values slipping in 4 of the 5 major recessions between 1980 and 2008. Absolutely not true.
So we already showed you those recessions, and you've seen that this is completely untrue.
Okay. Considering that a recession is prolonged, also not true. Most of the last recessions have been 6-month recessions, except for 2008. Widespread economic downturn that discourages consumers from financing home. It makes sense that weaker buyer demand would soften prices. Absolutely not true. None of that is true.
Correct. And this is part of what we've talked about on a previous video as far as bad news sells, and there just doesn't seem to be any any honesty in this type of journalism. It just seems like people are spitting out information that they either believe or think will sell, or something along those lines, but not information that is based on data. There's nobody that's fact checking this.
Yeah. Okay. So I'm going to give you a perfect example. Everybody here lived through COVID. You all remember it very distinctly. So what happened? The COVID virus was spreading. People were afraid of it because they weren't sure what was happening. So we basically shut down the economy. We basically, said, don't fly, don't leave your house, don't do anything, stay home. If you go out, wear a mask. Everybody said, screw it, I'm gonna stay home because I don't really know. They were talking about 4% fatality rates on the news that, there was, and saying, and they were putting up these charts saying basically, if you're over 50, the fatality rate was like 25%, and it was starting to scare people. Okay. The job losses were like off the charts, 20-something% job losses. The GDP growth was the biggest negative growth like we've ever seen ever in the history of GDP. And you would think buyer demand we had the highest rate of defaults, people not making the mortgage payment. We're up to like 4 million. It was like 2 or 3% of all homes were in default, or more. It was over 4 million homes in default, meaning they hadn't made mortgage payments, right? Guess what home prices did exactly during that time? Like we're talking the 6 months of the recession. Juana, do you remember what home prices did?
They went up.
That was the trigger that caused them to start going up. Home prices went up. Completely counterintuitive. We are not saying if there's a recession that starts in the summer and goes through the fall of next year, home prices will go up. Absolutely not saying that. What we're saying is, all other things being equal, you can't say that a recession makes home prices go down, because it doesn't. If anything, there's a bunch of people sitting on the sidelines waiting for interest rates to come down. If interest rates start coming down again, we're going to potentially go through the same cycle where people flood in the housing market. Now, it's also possible that sellers could say, okay, now I can move. So I'll put my house on the market and then I'll go buy a house somewhere else. Because a bunch of people have come on the channel about how they're waiting to sell one house and buy another house. So they're just locked into their house because they can't really move.
Anecdotally, we had a seller that was interested in selling last, I think, October, November timeframe. And, we had the pictures done, we had all that good stuff done, and we were ready to put the house on the market. He's like, not so much. I'm staying. And we're like, okay, seriously? Okay, fine. So he stayed. But guess what? His house just went in the MLS this week. So, people are starting to kind of get on with it.
Yeah.
He wasn't ready to sell then, but he is now, and he's not the only one. Sellers are coming on the market. So this is a good thing. Increased inventory is a good thing. It gives buyers choices. It also gives sellers choices. And you're thinking, what? Okay, here's how it gives sellers choices. Because people who would like to sell their home and get another home now have choices of homes to buy, and that will cause them to list their homes. So that's a good thing. We would like to see an increase in transactions. That would be good. From the real estate agent side, yes, that's really good, because that's how we get paid, is when we do transactions. But it's also, like I said, good for sellers, because now they can go ahead and go out and buy something. It's good for buyers because they have choices.
Okay, actual true story. We were trying to buy a house a couple months ago. In another market, second home. The sellers were doing a 1031 exchange. They were selling that house and they were getting a different house. It was an investment property. So we were negotiating. We'd made an offer, they'd countered, we were going back and forth. And then the one they were trying to 1031 to, those people, because they had this contingency in there, said, we've changed our mind now. We can just cancel the contract because you haven't dropped your contingency. And the seller of the property you were trying to buy called them up and said, hey, we're taking it off the market. We're just going to keep it. So they called us, or they told their agent, hey, we just decided to pull out of the MLS. We're rejecting their offer. And the next day it was out of the MLS.
Right.
Like actually happened. So that it's a real thing where, if there's not enough homes to transact.
It's a domino effect.
And then the other thing too is, keep this in mind, prices are more volatile when you have less sales. When you have less sales, they're more volatile. So we've had volatility in prices because sales have dropped so much. That doesn't mean more sale. There's this belief that like less sales mean prices go down. Absolutely not. When prices were tanking in 08, 9, and 10, prices were going down. We were doing 600 to 700 listings a year. Most sales we've ever made in our life were during that time. The numbers of sales in Las Vegas were out because everyone was getting foreclosed and all the houses were dumping in the market. The percentage of sales were literally off the charts. So there's not necessarily a correlation. When people say, yeah, but Todd, at 34% you're down from last year. Who cares? It doesn't really matter because we have more sales now than we had 6 months ago.
That's true.
But home prices are, arguably less than they were 6 months ago, even though they're starting to go back up. Okay, here's another quote from the article. Now remember the last quote I read? This is from the exact same article. The reality is home prices don't necessarily decline just because of a recession, says Cushy. Ultimately, supply and demand dynamics dictate the outcome for prices, and these variables differ based on geography.
Okay, so let me guess. It's both day and night. It's Schrodinger's cat. It's both dead and alive.
It's Schrodinger's cat. Okay. But there were there were a couple different people they interviewed in there. Okay. Here's another quote we'll talk about. The housing inflation storm. So now what they're saying is the housing prices are because of inflation. Housing inflation storm that pushed buyers out of the market seems to be decelerating. Even so, experts say prices will remain elevated, with CoreLogic forecasting a 3% year-over-year increase in national home prices by the end of 2023. I don't know that I agree with that. I don't know, but I'm just saying that's what CoreLogic is saying. Home prices 3% year-over-year from 2022 to 2023. So for buyers keen on buying a home, regardless of whether there's a recession, waiting for a big price drop could be a losing game. This is what I don't like about trying to time the market. You never know. We bought a rental in the end of 21, and we knew that we were paying more than we would have paid if we'd bought it a year ago. So, but you just don't know. If the crash bros are so in tune with housing prices, in the beginning of, at the end of 2019, why weren't they were doing the crash videos, why weren't they talking about the 40% price increase in homes that they were seeing? Because they can see what's going to happen in the future. They couldn't see home prices going up 40% in 3 years. Like I can't find any of their videos where they said, we know what's going to happen. They're going to go up 40% in 3 years. Right. So you just don't know. You just can't predict what's going to happen.
Well, not only that, but remember, everything's very market specific. So just because one market is doing poorly doesn't mean another market's not doing extremely well. And we've talked about this before, it could be just that your neighbor next door did really well and your neighbor 3 doors down did very poorly in the same time frame. There's a lot of there are a lot of different things to consider in the mix, and just because CoreLogic says that prices may be up 3% by the end of the year, are they looking up 3% December to December? Or
yeah,
are they looking?
That was it.
Okay.
It was December 2022. That was their prediction. They said, we predict home prices will be up 3% from December of last year. Okay. So if you wait and you think you're going to get a deal, maybe.
But the bottom line is, like we said at the beginning of the video, there are pros and cons to waiting, and you have to make your own choice. We are not saying go out and buy a house, okay? So please don't write that in the comments, because we are not, okay?
Yeah,
all we're saying is, look, there are all kinds of variables going on, but the idea that a recession is going to negatively impact home values, history does not prove that right. Does that mean that this recession will also end up in the green? We don't know, because there were a couple of recessions that were in the red. So that is a possibility, but it's not an absolute done deal. And, you should really look at the totality of the information and of your situation in making choices.
Okay, another one. The national median listing price for active listings in January of this year, 2023, was up 8.1% from January 2022. List prices were up 8%. Okay, 415. While it's down from the eye-popping June 2022 highs of 450, sellers are still expecting top dollar for their property. So two things in here that really got my attention. That 450 is fantasy land. It was the culmination of people thinking, I'm just going to sell and get my money, and all the people that said, this is my last chance to lock in a rate that's not, over 5%. You had this and people were crazy overbidding for properties. This was not people that are using this number today going, oh, but this is the baseline for, no, it's not. It's not any sense of a baseline. You can't, that price, you can't try to say that's a market equilibrium price. It is a highly skewed disequilibrium price. Second thing, sellers are expecting top dollar for their property. Talk about how people are getting used to these prices and they're not, they'll put it on the market really high, and if it doesn't sell, they take it off. Because you're seeing a lot of that.
Yeah. So, look, but to me, it's like any other market, right? Some people will price their properties high and they'll go fishing, right?
Yep.
That if they can find that crazy California buyer who will overpay because he's clueless, great. I've got a newsflash for you. Californians, while their sanity may be questionable at times, they're not stupid. Okay, they're not going to overpay for your house. And then you've got everybody else who says, hey, I'm going to price the house to sell because I really want to sell the house. So if you want to go fishing, great. If you want to price the house to sell, great. And then you've got the people who say, you know what, I'm going to put it on the market and it'll just stay on the market for 2-3 years until the market catches up with my happy number. We have those sellers out there too. So there are all kinds of things going on as far as list prices. The question is, which one are you, both on the buyer end and the seller end?
We looked at a house in this market that we were trying to buy in. A house had come on the market for 2.2. They dropped it to 2, and they took it off the market. Mm-hmm. It came back on the market at 2. They dropped it, I think, to 1.8 or something like that. It did go under contract, but then it went off the market. And then it came back on the market at 1.9. So you can see that people aren't just going to... I think the difference is 2008, I hate to use people to 2008 because we were listing bank-owned properties already in early 07, end of 06, early 07. We were getting bank-owned properties to list. Yeah. So we could see this was happening. And we were, of course, we were the cheapest thing in the neighborhood because we told the asset manager, look, nothing's selling. Here's 20 houses for sale in the neighborhood. You have to be the lowest price one to sell. So those people had to sell. They were an asset management company who's being told by their client, a mortgage lending company, a bank, a fund, or whatever, sell this house and return me the money, or we won't give you more assets. Mm-hmm. So they were like, we have to sell this house. Like I get judged if I can't sell it within 90 days, then like I get marked down and they give my company less property. Mm-hmm. So we got to sell the house. This is forced to sell. This isn't happening now. These people don't have to sell. Mm-hmm. Anyone who's got an under 4% loan does not have to sell. Trust me, they don't have to sell. Everyone can rent for more than they paid for it. Like every single one. Right. Okay?
Yep.
Okay, next quote. This is a quote from the article. Based on the current amount of inventory in the market and the level of active buyers, I don't foresee there being a substantial drop in the prices, said Mike Burla, New York-based real estate agent at the agency. Not that, he's a real estate agent, but his opinion, anecdotally, in his market, New York City, mm-hmm. which doesn't really have an MLS, they're not like, if you go on like Realtor or Zillow, they really don't have all the properties because they have their own system there. And then they have a ton of rentals. That's a different market for rentals. But it makes sense, right? If there's not a lot of inventory and there's a high buyer activity, which there is, right?
Right.
Because and some of that's artificial, right? People are going back. And remember, everyone left, and now people are going back.
Right.
Because prices are actually down pretty much. So they're like, okay, let's just go back.
Right. Well, prices are almost back to normal there.
Yeah, it was funny because I looked at rents in like the end of 2020, and I saw neighborhoods in like the Upper West Side where like whole blocks were, like these buildings with like 60 units had like 12, 15 open units. Mm-hmm. And they would never have that many open units. And they were like $1,000, $1,500 a month less than they had been. Mm-hmm. Like these places that were normally $4,000 a month were $2,500.
Right.
Because they were trying to get rid of them. So people have come back. Actually, it's funny when we looked at that chart, we looked at a couple of videos ago, New York City had a green circle. It was up like 1.2% or something for the year. Here's another one. This is my favorite quote from the article. Regardless of market conditions, buyers should consider their budget, income stability, and emergency funds before they jump in today's housing market, right? Literally, that fundamentally?
But that's fundamental in any housing market. We've talked about this kind of ad nauseum. If you're going to buy a house, make sure that after close of escrow, meaning after you've paid for your down payment, your inspections, your appraisal, your closing costs, after you've paid for everything, you have a minimum of 6 to 9 months of savings. That means that if there's something catastrophic that happens and you no longer have income, you can afford to meet your financial obligations and live. Now, I realize that that's a lot of money, but this is mom advice, right?
Yeah.
This is mom advice saying, hey, this is what you need in order to have, be able to sleep at night, to function and have a good life. Because without that, you're living paycheck to paycheck, and you're just one bad thing away from your whole life falling apart.
Anecdotal information. A person called me who happened to be biologically related to me, thinking about buying a house. And the exact words he used were, Dad, I'm thinking about buying a house. He's a software engineer where he could afford to buy a house where he lives based on his income. And my answer was, do you have 6 months of cash and enough for a down payment? And we did some math, and he doesn't have it. And I just said, then don't buy it. Like you're going to have to wait. You're going to have to save money until you have enough for down payment, which you can do 3.5% still FHA loans. And you're going to also have to have 6 months of payments in the bank after you close, just so you can be sure, which if your payment's $2,000 a month, okay, then it's going to be, and this is obviously isn't the Bay Area, right? But if it's $2,000 a month, that you have 12 grand, say, in the bank after you close, so you can just, you're good with all that, right?
Right. Absolutely. All right. Any more quotes?
I think we got another one here.
Okay.
On the other hand, trying to time the market can be missing out on your dream home. Did you read this article beforehand? I don't
No.
think you did.
No.
Trying to time the market can mean missing out on your dream home. If rates continue to rise and home prices don't drop enough to compensate for high loan costs, you can end up pricing yourself out of the market. This is a possibility. We're not saying this will happen. We're not trying to scare people. The opposite could happen. It could get better. But historically, like, what's a good analogy? Because if you look at the history of home prices, they tend to go up. Like, it would be like playing a casino game and you're betting against the casino. Hey, the casino's lost 3 hands in a row. In blackjack, the blackjack table, I'm going to jump in now because they're on a losing streak, right? I mean, it makes sense. If you've lost 3 hands in a row, what are the odds of losing the 4th hand? Well, if you're a casino, the odds of losing are like 49% or 48.5%, because I think that blackjack odds are like 98.5 or something, right? We had a bunch of Vegas people probably know that, but they're not going to lose. Like, the odds are that, that 98.5% is their ROI. That's the return of you as a player playing against the house, right? If you played $100 one at a time, you'd have $98.50 at the end, unless you're counting cards or something.
Right. But look, as far as that goes, we all know that those billion-plus dollar structures were not built because people were winning in those establishments. We know that the house wins. So kind of keep that in mind.
Okay. I think that was it for the article. So obviously this is, there's a lot to think about if you're thinking of buying or if you're thinking of selling. Like I said, someone came on the channel and said, I bet nobody on this channel everyone's on the sidelines. That's why you're saying the things you're saying. No, absolutely not true. Put our money where our mouth is. And we do have people that have come to us recently to purchase large amounts of super high dollar homes with cash.
Right.
There's money out there to buy with cash.
Right, there is. And look, in every market, there are people with cash. In every market, there are people who need financing. This is not a new thing. And that's fine, and it works for everybody. What we wanted to point out is that there's a lot of information out there, whether it's in print or in social media or television, wherever you're getting it. And the information out there is, let's just say, unverified. That's probably the kindest way I can phrase it. What we're trying to provide you is with some verified information, historical information, so that you understand, and what you read out there, what you see out there, you've got context, so you can better judge for yourself what's going on in the marketplace, and you can make informed decisions for yourself regarding whatever your real estate holdings are or future real estate holdings.
The reason I told you before that I was attempting to make a purchase in another market for a second home, etc., investment home, whatever you want to call it, because I believe in that market in 6 months, home prices will be higher.
Right.
In that specific, sub-market, whatever you want to call it, hyper-local market, they'll be higher. That I believe that. I've been watching this market for years. Another thing, couple macroeconomic things. There are a ton of people who have decided that they don't like cash sitting around in banks, and they're going to put that into some tangible asset that they have more control over. That also gives them a return, and that's why a bunch of money has flowed out into real estate. Mm-hmm. I believe that money could be long-term, sitting in real estate long-term. That would reduce the number of potential transactions. Other thing, the reason why people believe that a recession, bad things happen in the housing market is because of job losses. But remember, we still have this goofy thing where we create more jobs. We have more jobs being offered than we have people who claim they want to work, mm-hmm. by about 4 or 5 million people. And then every month when they post the job numbers, they're in the 400,000 mm-hmm. range of jobs created. And yes, you can go see companies are laying off, and every time a company lays off, there's this thing about how we're laying off and blah blah blah. But then you really don't make a big deal about it when all these companies say, like, every single airline will hire a ton of people this year. Mm-hmm. Pilots, flight attendants, gate agents, mechanics, customer service people, fuelers, baggage handlers. Every one of them is hiring a ton of people because those industries are growing and people are retiring, but they're all having to hire. The last piece of super anecdotal information. The stock market actually tends to start improving at the very beginning of a recession. Mm. Okay, that's when the stock market tends to improve. You usually don't get through that before the stock market. It usually looks ahead, right? As you know, we've been in sort of this bull market for the last year. Today, when the market closed, or yesterday when the market closed, or 2 days ago when the market closed, Friday when the stock market closed, the S&P was up again for the second quarter in a row. It's never happened in a bull market, ever, where it went in the middle of a bull market. You had 2 consecutive quarters where the S&P grew. So now you've got all these people talking about, does that mean the bull market's over? Or the bear market's over? We're back into a bull market where things are going to go again. Sorry, I meant to say bear market. It's never happened in a bear market.
Okay, so you're saying that we've been in a bear market, and we've had 2 consecutive quarters where the S&P closed high for the quarter. So
from the beginning of the quarter. From the beginning. So it's the last quarter of last year, and you can Google it. But I've been reading this information from people who are basically saying, this is interesting that this happened, because as a lot of last year all the tech stocks got crushed really bad. Well, they did. And then all of a sudden, at the end of the year,
they took off.
They took off like crazy.
Yeah. Well, and we've talked about this before. Part of the reason why they took off is because they all got religion and started hacking jobs that were superfluous. They decided to get control of their costs because their stockholders demanded fiscal responsibility.
Yeah. So anyway, you probably came to this video because you wanted to find out if you should buy a home in a recession. And we didn't give you that answer.
Well, we did.
The truth is, we don't know if there's going to be a recession, and we don't know if home prices are going to be higher or lower. Okay, that's the truth. Nobody really knows.
You're right about that, but we did give the answer, and the answer is it depends on your situation. Figure out what works for you. I'm a huge fan of the Ben Franklin approach, where you take a piece of paper and you write the pros on one side, you write the cons on the other, you assign weights to the different points, and then the truth is self-evident. I like spreadsheets, I like numbers, and that to me that's a very mechanical way, but a fairly reliable way to make decisions. Yeah. How was the video? Did you like it? It was different than the last one. I hope you liked it. Please leave us a note and tell us what you thought. Give us, any kind of information about your market that you're willing to share. We appreciate it. We're always interested in other markets. Thank you for watching. Please like the video, share the video, subscribe, hit the notification bell, and we will put out another awesome video for you tomorrow.
Yeah.
Bye.
Bye.